let's take it across to Pashupati Advani, Naresh Mirani, as well as Kunal Bothra, and find out what they're making of the market so far. Kunal, a nice climb up, 170 points higher. The futures now sitting at 25,200 plus. Do you think this is going to hold?
I think it's been a good recovery for the index, and you know what distinguishes today's move over the last 3-4 days, of rally or a pickup of price action for the indices is the support coming across from large cap names and the three key sectors. Financials, which have started to look very attractive. Many of the stocks are seeing a follow through up move. Large cap names in that balance. The second and the most important is the real estate index that indicates the high beta nature of the markets, the risk and appetite of the markets making a comeback, and then the IT stocks, which are also making a very strong comeback, especially after last week's mild disappointment which came by in the second half. Post the TCS result, we saw many of these IT stocks going into a mild bit of profit booking or a sideways price action. These stocks are now trying to make a comeback. So I think on the back of this, three key sectors which have started to look attractive, I would probably believe that the trends, at least on the stock specific front, looks positive. Now the two levels to watch out for in terms of the index on the Nifty specifically, 25,250 on the spot levels is something which I'll be watching out for. That could be a first litmus test of a breakout of sorts for the Nifty. And for the Bank Nifty, 52,000 on the Bank Nifty on the spot levels is a very important resistance. So if we manage to scale past another 150 points, then I think we could probably be looking at a breakout as well as a start of momentum for the index.
Okay, point taken. So that's the view coming in at the index level. But Naresh, what's the view on HDFC Bank? Doing quite well for itself. And the other one that we're watching out for is, of course, BSC. That too is having a great run. In fact, if you look at the last 1 week move, and that should come up for you on the screen, my guess is that stock must be up at least in double digits, if not more. So 22% in last 7 days itself. What's the view here, Naresh? One should book out the profits on BSC or hold on?
So starting with BSC, the stock has done really well and it's gone much more than anyone would have expected in the last 2 months. The stock, after all the announcements around it. So time to book some profits off currently, because it's gone from 3,000 in September all the way now to getting closer to 5,000 rupees. So that's a price point. We'll also see some sort of a pause. Then going to HDFC Bank, that looks promising because finally the stock has shown some relative strength in the last 2 sessions. So the stock was the first one to correct sharply from 1780 all the way down to closer to 1600, 1620 band, and which is the support band it had for the last 3 months, July, August. It did not close below 1580 and has now made a pullback. And now we go towards 1750 as a target in the short term.
Okay, point taken. That's the view coming in on BSC. Yes, definitely run ahead of everyone's expectation. But Pashupati, what's your take up? This, of course, financialization theme is not a short-term theme. It's not a matter of a few months or even a few years at that. Definitely a long-term theme for India. With respect to that and the fact that the NSE IPO is expected to be around the corner, which are the names from the financial ancillary setup that you would recommend?
Well, obviously, because the NSE IPO is coming, then CDSL and BSC obviously would be participating, because I think that the BSC, the NSE IPO is coming from currently at a higher P than the BSC one. So people would obviously look at BSC as a cheaper alternative and go for sort of convergence to mean. The other thing is that generally the bank index is doing well. It's being pulled up by HDFC Bank, which is a very large part of it. And again, I'm not so wild about HDFC Bank simply because I think the merger is going to take time. But overall, it's a good long-term buy. And if you're a fresh FII looking at India, definitely HDFC Bank has to be a big part of your portfolio, and therefore it is. So I think that that's what's bringing it in, as opposed to I like HDFC Bank because it's going to outperform the others. I don't think that's the case.
Okay, that's the word coming in right now on where HDFC Bank is headed. But Pashupati, what is it that you made of the the commentary coming in from Avenue Supermarts? QCOM clearly hitting them hard, and then of course other organized retail plays as well, quite a threat. Minuscule as it may be in the revenue share right now, but a Zudio, for instance, as well, is sort of eating into the territory that an Avenue Supermarts in. And of course, needless to say, the company also coming out in the open and saying QCOM clearly has eaten up into their market share and led to that margin slip, at least when it comes to the urban large metros.
Well, the thing about Avenue is that they are making a large amount of their net profit from non-food items in the sense of, they're making money on garments and, underwears and socks and all the other things, kind of like Costco and Walmart are in the US. So they're becoming more like that. But it does take time to move from one, when they've been only in food to go across all segments. And I think that that's happening. Now, during the transition, obviously things are all over the place, and that's obviously putting some pressure on the margins. But I think that long-term Avenue is a good place, and it's a good company, certainly well-run company, and the promoter and the CEO have done very well and have made fantastic things that are making it happen. It's unfortunate that, the temporary blips have meant that the brokerage houses have lowered their weights, but I think that's just a matter of time.
Right. In fact, we chatted with Venugopal Gare from Bernstein as well just today morning, and he also shared with us his thoughts on what he thinks about DMart going forward and the kind of challenge that they're going to have from the entire quick commerce space.
Given where we see Avenue Supermarts opening today in terms of stock price, see, if you were to, I actually find it a bit difficult to believe at an India-wide scale you're going to see an impact on kiranas in general, at least in the next couple of years. We're positive in quick commerce. I'm still saying that. It's hard to believe it will be $50 billion in 3 years, right? So it's not going to be that disruptive for the overall ecosystem to be impactful enough, because I think convenience TAM itself is relatively restricted. Some of the quick commerce names, both upcoming as well as the ones which exist, we have overweight stance on them. Now, interestingly, I do like organized retail as well. So I think this is from a pivot point of view, it's a very unique situation where we are positive on both at this juncture, right? And I think it's going to play out over time in a fairly different way, but we're currently overweight both. Quick commerce is preferred over organized retail, and both are preferred over traditional retail.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits, and then break right through them. Become something more. It's my time to rise.
Hyundai Motor India Limited now proposes an initial public offering of its equity shares. The 100% book-built offer is being offered at a price band of rupees 1,865 to rupees 1,960 per equity share of face value of rupees 10 each. The anchor investor offer period opens and closes on Monday, October 14th, 2024. Offer opens on Tuesday, October 15th, 2024. Offer closes on Thursday, October 17th, 2024. For risk involved and other details, please refer to the red herring prospectus, which is available on the website of the company, SEBI, BRLMs and the stock exchanges.